In our last video, we looked at how the ultra-wealthy manage to minimize their taxes with savvy strategies. But today, we're flipping the script. We're talking about practical, legal ways that you and I, ordinary folks with regular jobs or side hustles, can reduce our tax burden. First up, we have work-related expenses. Many countries allow deductions for expenses that are directly tied to your job. Let's say you're a freelancer, a remote worker, or even a hospital worker. There are often certain costs you can deduct. In the United States, for example, if you're self-employed, you can deduct your home office, internet bill, and work supplies. In Canada, similar deductions are available for remote workers. Meanwhile, in New Zealand, employees working from home can claim part of their rent, electricity, and internet as work-related expenses. Just make sure to keep receipts to support your claims. Second, saving for retirement doesn't just benefit you in the future, it can also save you money on taxes now. Contributing to retirement plans is one of the best ways to lower taxable income. In the United States, contributions to a 401k or an IRA can reduce taxable income. Canada offers similar benefits with RRSPs, while the United Kingdom has pensions with tax advantages. Australia's superannuation contributions work similarly, by reducing your taxable income and helping you save for the future. Third, thinking of picking up a second job? While it's a great way to earn extra, it's essential to understand the tax implications. In some places, a second job might bump you into a higher tax bracket. In New Zealand, for instance, income from a second job may be taxed at a higher rate if it pushes you into the next bracket. On the other hand, in Australia, each employer withholds tax based on your total income without necessarily increasing your tax burden. And in the United States, having a second job might mean additional withholding, so make sure you're aware of the tax effect before diving in. 4. Take advantage of health savings and medical deductions. Healthcare costs can be a significant part of your expenses, but they may also offer tax savings. In the US, health savings accounts, or HSAs, and flexible spending accounts, or FSAs, allow pre-tax contributions, which means lower taxable income. Canada offers tax credits for medical expenses, while in the UK and Australia, certain private healthcare costs can be offset by tax credits. By keeping track of your healthcare spending, you might find some valuable tax relief in unexpected places. 5. Claim education and training deductions. Investing in your skills, you may be able to offset the costs through tax deductions. In the US, the Lifetime Learning Credit allows you to claim deductions for education expenses like college or job training. In Canada, there are also education tax credits for tuition expenses. Australia allows job-related education expenses to be deducted, and in the UK, self-employed workers can deduct training costs if they're directly related to their current business. So check with your country's tax authority to see what's deductible. 6. For regular earners, tax-free or tax-deferred accounts are great for building wealth without the tax burden. In the United States, a Roth IRA allows for tax-free growth on contributions, while in Canada, a tax-free savings account, or TFSA, offers similar benefits. In the United Kingdom, ISAs, or individual savings accounts, let you save up to a limit each year with tax-free growth. For those in Dubai or the UAE, where there is no income tax, investments aren't taxed either, giving expats and residents a unique advantage in growing their wealth tax-free. 7. If you regularly give to charity, you may be able to claim a deduction for those contributions. In the United States, charitable donations are deductible if you itemize your deductions. Canada, the United Kingdom, and Australia also provide tax benefits for donating to approved charities. Keep in mind that you'll need receipts for any donations. Even if the deduction isn't huge, every bit counts, and you're supporting a good cause. And 8. Planning a big purchase? Timing can make a difference when it comes to taxes. For example, in the United States and Canada, home mortgage interest is tax deductible. In New Zealand and Australia, rental property investments offer tax advantages that can lower your taxable income. Whether it's property, business equipment, or something else, look into whether making the purchase at a certain time could reduce your tax liability. It's a great way to align your financial goals with tax benefits. To sum it up, there are several legal, achievable ways for everyday earners to reduce their tax burden. From tracking work expenses and retirement contributions to making strategic donations and managing investments, these tips can help you keep more of your hard-earned money. Remember, tax laws are complex, so consulting a professional for your specific situation is always a good idea. Like and subscribe for more financial tips.